Welcome to ETF Leaders, powered by the New York Stock Exchange. I'm Judy Shaw. Joining me today is Lance McGray. He's the Managing Director, Head of ETFs at Advisors Asset Management. Lance, thanks for joining me.
Thanks for having me.
So Lance, can you talk briefly about Advisor Asset Management's history and tell me why you decided to become an ETF sponsor?
Absolutely. So Advisors Asset Management, we've been around since 1979. So we have a longer track record than most people think we do. And AAM is truly quite a different company in this space today because of our breadth of products, from our SMAs to our mutual funds to our bond broker dealer side and structured products, and now our ETFs. As you mentioned, we are a new entrant into the ETF space. Our first two products were launched 2 years ago, so we just came up on our 2-year anniversary with two of our high dividend value products, SPDV and EEMD. And it was really an interesting time for us to get into the space because of the massive growth in the world of ETFs. We've seen the growth with our UITs and our SMAs and our mutual funds, and as you can imagine, a lot of advisors and a lot of investors are migrating from products that are really geared around commission-based business on the advisory side into more of a fee-based business, which obviously tends itself to be, where the flows are going on the ETF front.
We've seen a number of new ETF sponsors entering the market with thematic strategies. AAM is different. You've led a rules-based dividend ETF. Why?
So many people think that the dividend space is crowded, and there are over 60 plus US listed dividend products in the marketplace. In terms of AAM and our product initiative, it was almost paramount for us, given our background in the income environment, to produce and come to market with our first dividend products as our first ETFs. Now, when you think of dividend investing, there are two camps of dividend investing investors. One camp are the people that invest in the high yielding equities, and the other camp is investors that are looking at dividend growth or dividend sustainability. What we realized after 10 plus years of producing a number of income solutions is that these two solutions, they don't have to, they can complement each other. You can in fact combine these two strategies into one. And that's exactly what we've done with our high dividend value suite, is we pair a high dividend yield with high dividend sustainability, which is gauged through free cash flow, and more specifically free cash flow yield. So to your point, we led with dividend ETFs because there are ways to improve on existing dividend products out there. I spoke about the combination of high yield and dividend sustainability, but our products also differ from a lot of dividend ETFs because they offer monthly distributions as well, which is a nice tweak on our products, which a lot of dividend products don't necessarily have.
Now, you recently launched the first ever low duration preferred ETF, ticker PFLD. How did this ETF come about, and what are the potential benefits of this first of its kind ETF?
We're awfully excited about PFLD. PFLD was launched at the end of November on the New York Stock Exchange, and as you mentioned, it is the first low duration preferred product in the marketplace, and we're super excited about that. In this low rate environment, investors are always seeking yield, and whether you're looking at our high dividend value suite or now PFLD, Advisors Asset Management, we are a fantastic source of income solutions for advisors. Now, on the PFLD front, we do think that the preferred marketplace is a very underutilized area for income-seeking investors, right? In this low-rate environment, a lot of investors aren't getting their yield from traditional fixed income offerings. On the flip side, a lot of advisors have sort of migrated into the world of equities to get their 4% yield. 2019 was sort of an anomaly where you're getting you're getting an uptick in yield from the equity market, but you also saw a tremendous amount of capital appreciation as well. So what we're thinking on the equity front is, there are many risks associated with getting your yield through stocks. And at this point in time, it's always worthwhile dialing that back, and we think the preferreds is a very, very valuable space to get that income that you're looking for with not necessarily all the risks that you may get in an equity portfolio. some of the talking points about PFLD and what make it different from the other preferred products out in the marketplace is that number one, well, let's take a step back. If you talk about preferreds, there's really two major drivers of risk with preferreds. The first is your interest rate risk, right? Interest rates have a major impact on the price of the preferred market. The second is your call risk. And what we do in PFLD is we try to minimize those two risks as much as possible by limiting our duration to securities with a duration of less than 5 and removing securities that have a price that is currently trading north of 105% of its par value.
Okay, and finally, what's next for AAM ETFs?
So we're all about income right now, right? Our client base, our advisor base is really looking for income solutions. And as I alluded to earlier, we are going to continue producing income solutions because we know how challenging this environment is to achieve the income levels that you're looking for. And we do think there is a lot of opportunities out there. Unfortunately, we don't have any filings in place, but we are working on a number of innovative and interesting solutions to meet the investors' income needs.
Okay, that's great, Lance. Thank you so much for joining me today at Inside ETFs.
Thank you so much for having me.
And that's ETF Leaders, powered by the New York Stock Exchange.